I've said it before, and I'll say it again. If we believe that the BTC bottom is in, then we believe that the Bitcoin whales have been selling the bottom, and that would have been a catastrophic mistake on their behalf. Do we believe that the retail investors are actually winning here? And do we actually think that the whale investors have made a mistake? My name is Nick, and welcome back to Cheeky Crypto. Today, we are going to be diving down into everything Bitcoin, specifically with this move to the upside, and I'm going to be sharing my thoughts and opinions on the data as I see it. Now, this might not be for everyone. In fact, I imagine that there's going to be a lot of hatred in the comments down below. That's okay. Everyone can have their opinion. But, you know, I'm kind of being led by the data here, okay? And not going to just take a look at a chart and take a look at a couple of candles on that chart and think that we're going to the moon. I think this rocket is not going to be reaching orbit. That's my personal opinion. And I'm going to go through why I think this. As I get into this video, if you find it useful and informative, smash that like button. It'd be amazing if we can hit 2,000 likes on this video. So light it up. Let's see what we can do there. And if you're new to the channel, subscribe, tap the bell, select all the notifications, and you will stay up to date with all the video content that we do here at Cheeky Crypto. Join us in Discord, though. It is the first place that we go to notify you of everything that's going on in the crypto space. So why not check it out? Let's go ahead and dive right down into this, right? Because I think to start with, I want to dive into the sentiment, right? So by taking a look at CoinGlass here, we can kind of get an idea as to kind of how people are feeling. Are they going long? Are they going short? Is there a lot of greed? Is there a lot of fear? All that kind of stuff. Now, this is important because usually the market moves against the majority. Okay. And, you know, at some point, these things kind of get stacked down. Now, we've seen a significant short squeeze and we've seen a lot of liquidations. I'll talk about those in a moment. Essentially, really what you've seen is basically everyone who shorted FTT and everything that was kind of like Solana and all that kind of stuff from the FTX, I guess, collapse. Has been wiped out because one of the key things that a lot of retail investors tend to do, and that is take profit. You've got to take profit when you see it there. Okay, so when we start diving down into whether people are going long, going short, we have to understand that actually the market makers are the ones who are actually making the money right now through liquidation events. It's important to know that they are going to go against the majority because wherever the main pool of money is going to be the liquidity, that's generally where the price wants to gravitate towards. So right here, we can see that 51.1% of participants are going long on Bitcoin and 48.9% are going short on Bitcoin. Okay, this doesn't necessarily mean that there's a bigger pool in terms of actual liquidity lower in the charts or higher in the charts. We need to ascertain whether or not that is going to be the case, and we can look at things on chain to try to help us understand where that sits or in the charts, and we can try to take a look at some patterns on the data in terms of candlesticks and what they might mean. Now, usually speaking, when the majority move in one direction, there is more liquidity in the opposite direction. So in this case, 51.1 going long generally means that there's a bigger pool of liquidity lower down in the price chart. But obviously, this is just a percentage of long positions versus short positions. Doesn't show you how big those positions are. So when these numbers are really close together, 51.48, for example, then you know things are not necessarily going to be exactly as you want them to be. But as a general rule of thumb, you'll go and think that, okay, there's probably a lot more money to be made if the price was to retrace right now than it was to go and continue moving up. Okay, now we can take a look by platform here over the last 24 hours, and you can kind of see where the bearishness sits and where the bullishness sits by platform. And this is quite useful if it helps us understand whether or not one particular platform is heavily skewed in one particular direction. Now, for the most part, this is well balanced. Only smaller platforms are heavily swinging in one direction, like Bitfinex, for example. Small players, they don't generally kind of gravitate terribly too much in one direction. Now, OKX is an interesting exchange. It's been on my radar for about a week now, with heavy amounts of liquidations that are occurring on there. So much more liquidations, in fact, an obscene amount more liquidations happening on OKX than that of Binance. Now, this is what is happening with FTX, and this is how FTX ended up on our radar just before their collapse, and why we were talking to our community saying, actually, we probably want to get off of the FTX exchange, and we probably want to be thinking about shorting FTT because there's a money grab going on here, and essentially what we're witnessing is OKX or FTX at the time going after liquidating as many people to try to capture as many of those fees as possible to save themselves from an imminent collapse. And with FTX, we actually saw that collapse occur. With OKX, we are not there yet, but they have been doing some pretty extreme things when it comes to their liquidations, which if I come on over into here, we can see very, very clearly. Now, on the last 24 hours, or in the last 24 hours, $380 million of liquidations have occurred. Bitcoin finally takes top spot, which has been kind of suppressed by Ethereum for quite some time. You can see it's $152 million of liquidations. Now, as we come down this list, right, in the last 24 hours, it's no surprise that short positions are the ones that got completely wiped out. But OKX is 45.7% of all those liquidations. So 380 million, 45.7% of it, or $174 million of liquidations was OKX. Now, OKX has been on this radar for quite some time, when they've been smashing the top spot, right? Binance, for example, 22% of liquidations, $83 million of liquidations. In comparison, you can say that OKX has doubled the amount of liquidations that have occurred on that platform than Binance. Now, I'm a believer that Binance is bigger than OKX, but let me know in the comments down below whether you think OKX should be double the amount of liquidations that Binance has. To me, this is unnatural, it's unheard of, and it's not normal to see OKX at this top spot. In fact, when FTX went bust, they were doing 80% of all the liquidations. Okay, so, you know, there is an extreme variation between the FTX and OKX, but they do have these similarities of, you know, coming at the top of this chart for liquidations. So the same story kind of goes out there, guys. What we said with FTX, I'm going to say about OKX here. If you're on that exchange, get off that exchange. I wouldn't be happy keeping my cryptocurrencies on an exchange anyway, let alone one that is that heavily after liquidating people. Okay, so yes, there's going to be participants that might be, you know, causing these liquidations, you know, certain types of players on gambling mentalities, etc. I just don't think the platform Binance should be in second spot in comparison to that of OKX. So I think it's unnatural to see $174 million of liquidations on one singular platform. I find that unnatural. Now, the other one that's quite unnatural is BitMEX. It has taken that top spot way above OKX and Binance on occasions, and is the top liquidation event in the last 24 hours at $4.53 million of one single liquidation. Okay, so OKX, BitMEX, I'm a little bit skeptical on those. Be cautious. I'm not on any exchanges. I don't think people should be on exchanges unless you have open positions. Other than that, I would be looking to protect myself personally. One of these things that we have to be really aware of is that whilst this price is moving up, who is benefiting the most, right? Because it is not who you think it is. It isn't retail investors that are benefiting. It's not whale investors that are benefiting. It is the market makers that are benefiting right now. And I think we're going to go into some data in a moment that's going to help kind of illustrate a lot of these kind of different things that are going on with the on-chain data to help us pinpoint where the money's flowing to, because, you know, it's got to go somewhere, right? And if I can't see it, well, it's only one place it can go that's not really visible, and that's going to be the exchanges, at least not easily visible through some of the data sources that I'm currently using. So when we have all of these kind of liquidation events, I am, you know, really skeptical, specifically when we have things like OKX taking 45.7% of all total liquidations in the last 24 hours at $380 million of total liquidations. It is increasing quite a bit. A lot of money is transferring between people here, and let's kind of bear in mind who is benefiting the most from it. So on that note, let's dive down into some on-chain data for Bitcoin and take a look at some of this data and what it might actually mean. So up here, we can take a look at quite a few different things. I'm going to start here, top level, inflows and outflows for 2023. 599,000 Bitcoin goes onto exchanges. 619,000 Bitcoin comes off the exchanges. That's not a huge gap, right? We're talking 20,000 Bitcoin. That's the difference here, right? The price has moved up rapidly, right? So we know that Bitcoin hasn't really left the exchanges. There's been transfers between participants, and we can kind of see that within the data, but we haven't actually seen any accumulation. Nothing of note. 20,000 Bitcoin is not a lot of Bitcoin to just disappear off the exchanges. That means that it's still on the exchanges, and that also concerns me quite a bit. Now, we can see here with the Bitcoin exchange balance, we can see how it's kind of just not done anything really in 2023 so far. A little bit going on, coming off a little bit, nothing too major. We can also see that the net difference change between the inflows and the outflows has actually kind of started to peak up towards our neutral line, meaning that there isn't actually that much activity going on when we take consideration of inflows and outflows. The difference between those is not really there. So even on the 30-day average bars, we can start to notice that actually all Bitcoin is doing here is just transferring between people. And this gets me really concerned when we start thinking about who is currently really heavily invested in BTC right now and who potentially is transferring that Bitcoin to them. Right, we can see it all over crypto Twitter. We see it all over, social media just in general, that we're in a bull market. I don't think we are. And the data that we have here kind of tells the same story. All you're really seeing here is no real demand for Bitcoin coming in, no accumulation for Bitcoin, but you're just seeing Bitcoin transfer from player A to player B. Okay, and that's an important thing to note. Now, in terms of hodl waves, I'm not really going to spend too much time in this video talking about these, but it doesn't actually look like Bitcoin has any major concerns with shakeouts or anything like that from long-term holders. So it does look like Bitcoin's just aging well in the wallets at the moment. Okay, and at some point, I'm expecting massive shakeouts to occur here. Now, in terms of inflows and outflows, we have seen a spike in the last 24 hours. We saw 53,000 Bitcoin coming off the exchanges and 35,000 Bitcoin coming onto the exchanges. Now, that's a total, if I get my head in there, just short of 20,000 Bitcoin. Okay, now that just so happens to be the difference, the total difference of Bitcoin on the exchanges disappearing, right? It's 20,000 Bitcoin, and it happened yesterday, which meant everything else was just neutral. And what I mean by neutral is whatever demand has come in for Bitcoin has been equally met by the supply. There's equal supply to demand, meaning we can't possibly be in a bull run unless demand outpaces the supply. And we haven't seen anything of note just yet. This is really important. We don't want to get too carried away. We can't be calling a bull market without actually having the actual underpinning data that actually corresponds to what the definition of a bull run is. And the definition of a bull run is when the demand outpaces the supply. And, well, we don't have that. So we can't really be calling it a bull run without actually what underpins a bull run. So we've got to keep that in mind. Now, as I come on over, we have wallet counts. Now, wallet counts are something that I've been very vocal about for months. And I've been talking about June 2022 not being a bottom, and we saw November come, and lots of people just said, well, it was just FTX and yada yada yada. Essentially, sure. It didn't have to be FTX, though. It could be absolutely anything. It just needed to nudge crypto over the edge, and it was going to crumble down. And I think that's exactly where we are right now. Now, the wallet counts help us underpin who is buying and who is selling. This is incredibly important because, as I said earlier, there's always a buyer and there's always a seller, and we're seeing transfers of Bitcoin between player A and player B. Okay, so when we have that, it's important that we actually represent that data, okay, and not just talk about it and just say, look, we think that, there's no demand here or whatever. I'm giving you the facts behind it, right? So when we come into this and we have the wallet counts, and we can start to say, okay, well, if certain wallets are going up, then we should expect other wallets to go down. Okay, there's a buyer and there's a seller. And the only wallets that are exempt of this are, of course, the exchange wallets. The exchange wallets are not included in any of these wallet counts, as far as I can tell. And therefore, if all of these wallets are going up, then exchanges are selling. And if all these wallets are going down, then essentially they're selling to the exchanges, and the exchanges are buying, right? So understanding that there's going to be a balance to be met here, okay? Everything has to balance out. This is a number game, right? You can't have discrepancies when it comes to Bitcoin's numbers because there's only a finite amount of Bitcoin and it has to go somewhere, right? It's going to be a wallet that it's going to be in at some point. So here we have 3 retail-sized wallets, 0.1 Bitcoin or more, 1 Bitcoin or more, and 10 Bitcoin or more, krill, shrimp, dolphins. Okay, now in here we can see that the krill and the shrimp have recently been accumulating. You can kind of see it right in here with the wallet counts starting to go up after getting shaken out just at the peak here. Okay, you can see they started to get shaken out just at the peak here, and they started to go up. The dolphins, on the other hand, not so convinced. These guys are still looking to come on down. So we know that these guys are selling and these guys are buying. Okay, so we've got our retail buyers right there. Okay, so if retail is buying, what are the larger whale investors or institutional investors doing? And that's where these wallets start to come on in. We can see we have 100 Bitcoin or more, 1,000 Bitcoin or more, or 10,000 Bitcoin or more, the sharks, the whales, the kraken. Okay, and we can see that these guys are selling these guys are selling, and these guys actually go up by 1 wallet. Okay, so essentially we go up from, I think it's 113 to 114 wallets with at least 10,000 Bitcoin in them. So essentially all we've really done here is we've seen transfers between participants, a little bit of an increase with 1 wallet with the Kraken, so that counts for 10,000 Bitcoin. We have a decrease going on over here with these kind of wallets, dropping down from a high of 2,041 to 2,039, so a couple of thousand Bitcoin sold off there. And then over here, we're going from 16,113 down to 16,096. So where's that Bitcoin going? Well, it's going to the retail investors, right? The retail investors believe that we're in a bull market and are basically buying because, you know, they're not going to see these prices again, right? That's the narrative that we're being told, that these prices, that you're not going to see these again. We're never going to see 20,000 Bitcoin again. So, you know, we might as well buy now, dollar cost average now. I'll go long now, right? I'll buy, you know, 100 Bitcoin now, whatever kind of narrative that you're hearing from some of the moon boys out there. But essentially, the data doesn't tell us that. The data tells us that retail investors are buying, but it doesn't tell us that the whale investors, the institutional investors, the central banks, the big smart money players are not participating. And if they're not participating, well, fuck me. I'm not going to participate, okay? Because why would I? I don't want to get caught out by retail investors kind of just, you know, thinking that we're going to a moon. And, you know, actually the big money is saying, I'm going to sell on this. I'm going to use this as exit liquidity. I'm going to get out of my positions, because essentially that is what is going on here. We are seeing big smart money players exiting their positions, and all we are seeing is retail investors thinking that we're going to the goddamn moon. And, well, the data does not suggest this. So when we kind of think about it, we can take a look at things on a slightly larger scale. Okay, so if we take a look at retail wallets, this is what's been happening during the last 365 days. Okay, this was the bottom. No, this was the bottom. No, this was the bottom. No, this was definitely the bottom, right? And you can see every time there is some kind of indication where some kind of moon boy says, look, we're going to the moon, accumulation occurs. Over here, accumulation occurred. Over here, accumulation occurred. Well, at some point, the rug is going to get pulled, okay? Because in order for the whale investors to come into this space, we have to see retail investors sell. This is a sum zero game. There's always a buyer and there's always a seller. Okay, you can't just magically buy Bitcoin randomly from somewhere. Someone's going to be selling you that Bitcoin if you're looking to buy it. Okay, so essentially, if we want big money, smart money to come in here and actually move the needle significantly, well, then unfortunately, they're going to have to buy that from some dumb money or some retail money, right? So some retailers are going to have to get shaken out of the space and are going to have to essentially sell their Bitcoin to the whale investors. Now, as I said before, I don't think the whale investors are going to be selling the bottom. They're going to be buying the bottom, and the bottom is going to get created in a very similar way as what it was created back in 2018. So when we come back into here, we can, before we actually talk about that, we can talk about where the whale investors currently sit right now, right? They've been coming out. They've been coming out every single time retail investors believe that there's a bull market starting. So we can take a look. We can see that they came out here. You can see that the June lows, they were selling into the June lows, and fuck me, yes, they have in fact been selling the November lows. So, like I said before, and I'll say it again, and I will repeat it until it goes in. Do we think that the whale investors, the institutional investors, the smart money, is selling the bottom? Or do we think that retail investors are just providing the exit liquidity for them to dump even more? I'll leave that for you guys to fill the comment section with down below. Okay, so let's go and take a look at 2018. Okay, so in 2018, what do we see? Very similar stories. This is the bottom, this is the bottom, this is the bottom. No, the bottom's somewhere around here. And then eventually, retail investors lose faith after all that accumulation, all those people buying up Bitcoin because they believe that it was going somewhere. Then they start to sell. Now you'll notice that the price doesn't move initially, right? And that's for good reason, right? They're selling and the price of Bitcoin just isn't really fluctuating any, not until here, okay? And why is that? I'll tell you why. That's because during this entire flat period right here is where the whale investors are buying it from the retail investors, okay? So just bear in mind that there's always a buyer, there's always a seller. I keep saying it and I keep boring myself to death with it. You have to have a sum zero game. There's always a winner, there's always a loser. Someone is buying, someone is selling. Okay, so just bear that in mind, right? Essentially, it's happened before. And this is just a basic. It's the basics of pretty much most markets. There's always a buyer, there's always a seller. I can't think of any market that wouldn't have a buyer or a seller. Okay, you can't just magic something out of thin air unless it's a synthetic asset, and in which case you're really just down a casino and you're gambling at that point. So to kind of bear this in mind, right? That's what's happened previously. And we can also take a look at that large 10,000 BTC wallet, right? That large 10,000 BTC wallet accumulated during that bear market and then flooded the system. Right here, right as we started to see this big drop in Bitcoin's price, right towards the actual bear market low of 2018. Why would they do that? Why would they flood the system with excess Bitcoin? They do that because they want to make sure that they shake out as many retail investors as they possibly can. Okay, and just to kind of put this into perspective, this is where we are right now on that same wallet size. They've accumulated during this bear market, and they've yet to flood the system. Okay, I think that flood will come only when retail investors are not suspecting it. Okay, so just kind of keep these things in mind. There's a lot of things to think about. There's lots of kind of concerns I have in the space overall, and lots of things that we need to be aware of, okay, because things are not as good as some people want to make it out to be. Okay, so let's jump down into the price chart for Bitcoin, right? So here we have the weekly time frame. Now I'm going to be looking at this weekly time frame because we're about to come up against some pretty big weekly resistance. Okay, we can see it right up here. And you know what we can do is we can see that we have the white line. This white line here is our 200 EMA, and our red line is our 50 EMA. Those things are due to cross into what is called a death cross. Ultimately, it doesn't really mean too much. It just means that the price of Bitcoin over a 50-week period is about to drop down lower than the price over a 200-week period. They call it a death cross because it scares people, but it doesn't actually mean terribly too much. It's just an average price crossing, so people think that something is going to be overvalued, undervalued, and so forth. So in the case of a death cross, I think it's undervalued now on a larger time frame, and basically, yeah, it's going to come down in price. People will react negatively to it, but all it's really doing is showing you what's already happened, okay? But people will react to it. Now, what's more important is that the 200 EMA is used as a trend filter. When you're above it, people consider us to be bullish, and when we're below it, we are considered bearish. Now, we can see that we got rejected from this area in August. And what's the chances, do you think, that we're going to get rejected from it now in January or February of 2023? I think there's a high probability of it. And the high probability comes because we are up in this overbought area. And I speak about this quite a bit because we do have bearish divergence occurring on our RSI, not the stochastic, but on the regular RSI. Okay, now we can see right in here that our RSI has increased. Okay, but whilst our RSI has increased into a higher high, our price has failed to do so. And we can take a look at this from several different areas. We can take a look at it from this peak up here if we wanted to, from price right up there. And we can drag our bearish divergence right up into this peak right here as well. And you can see that what we've done is we've moved a RSI, a relative strength index, from the lows of oversold to overbought without going back up into the same high price area that we were previously. So price up here, for example, was $32,000, right? And we were down nice and low, meaning that we had loads of room to the upside, except we fell down, right? This is a relative strength index for you. And then, of course, we start to move on up, and we can see that our RSI, our relative strength index, goes higher than we were previously back in June. This means that actually we have very little momentum to the upside. Not a lot of momentum at all. And we can see this divergence in price and RSI. It means that we are going to potentially drop down quite significantly here as that RSI heads up into the overbought area. As Bitcoin becomes overbought on a weekly time frame, it is not a good place to be. So again, I will throw up our stochastic RSI that is up in this overbought area and reflect on what's happened in the last few times that we've been up in this high area. We can see it time and time again that these are all the areas that we've had major pitfalls or major retracements to the downside. Not to say that it always does this, because the RSI does not, and the stochastic RSI does not represent price. It only shows you the strength of the movement. But when the strength of the movement is running out of momentum and we are reaching resistances, we should be really aware that that only really tends to go in one direction, and that's down. So we don't want to get too carried away, okay, essentially. We're not seeing any of the big players buying in the space. We are not seeing anything other than retail money flooding into the space to kind of soak up the little amount of Bitcoin that's actually being offered for sale. And I think that essentially all that is really happening here is that exit liquidity is being provided at this point for those larger investors to get out of their positions. And again, essentially what they're doing here is dragging the price down lower to shake out as much of the retail investors who bought in much earlier so that they can be sold cheap Bitcoin further down the line. Essentially, that is the goal of the whale investor these days. So just kind of keep this in mind. There's always a buyer, there's always a seller. At the moment, large, smart money is not buying. Only retail investors are buying, and they're buying directly from the institutional and whale investor. That is to me is a recipe for disaster. Not only that, we're heading up into the resistances areas. We've already taken out a lot of the liquidity that was created from the FTX saga. So really, there's a stack of long positions that are kind of seeping into the system now, and that is also more juicy liquidity for the market makers, the people who are actually making money in this market right now. Bear that in mind. I'm going to leave this video right there. If you found it useful and informative, hit the like button. I do appreciate that. Join us down in Discord, guys. Check it out, linked in the description down below. I don't think you'll regret it. Until the next one, have a fantastic day.